Walt Disney first. So, of course, it's one of the global giants. It owns TV shows. It owns the television network ABC. It has the movie production business, theme parks and resorts. And then it has ESPN, which is kind of like the SuperSport of America.
That's it.
I mean, you know, obviously SuperSport would love to be called the ESPN of anything, but we are very familiar with SuperSport, but ESPN is huge. $160.9 billion worth of market cap, price to earnings ratio 18.2, dividend yield 1.52%. But just update us on the business model and then why they're in the news and what do you think's going on there?
The interesting that the media business is really the bulk of the business, and ESPN, as you said, is sort of the star of that show. So 44% of their revenues come from the media programming. That's distinct from studios, which does the movies as well. So it's the biggest part of their business, very profitable. Traditionally has had a huge defensive moat around it, but now that's being attacked by these streaming services.
Because the ESPN model is that basically they sell that to all of the guys who have cable or other packages, bouquets, because everybody always wants that, and they get I don't know how many dollars. And the aggregate number of ESPN subscribers is well above 100 million. But it's been attacked because people are watching stuff online, and also some of the other bidders for those media rights, including companies like Amazon, Facebook, and Twitter, and others starting to get into that game.
Yeah, and what we've seen is because of the value of these rights for sport, because it's live and it is, it's very valuable, and they can sell the content on. They've had to bid for those rights, and what you're seeing is actually players. You see these massive transfer fees extracting a lot of the value that's being created. So it's an interesting dynamic. They've had to pay a lot to secure rights to sustain that content, which they need to sell.
And the biggest like NFL, football, but then also the basketball and all of that stuff. You're saying the actual players, the LeBron Jameses of the world, are taking too much money, so the rights are going up in cost. Plus, it's a bad time for the likes of ESPN because they've got rival bidders paying even more astronomical numbers for one or two games, which is cracking up the market.
Yeah, so it's quite a challenging time for them, and as what we're seeing is there's this term cutting the cord, where people are deciding whether they want these bloated bouquets of traditional cable TV and rather go for the streaming services. So while they have to keep paying more for content, the revenue is starting to drop. So it's been quite a dynamic, but the big news is that Disney announced on Tuesday, in fact, that they are launching their own streaming services.
Correct.
So this was a bit of a bombshell.
For what? For ESPN and the movies, because they pulled their deal where they've put some of their library of movies onto Netflix.
Yes, so it appears that it's for new movies, because they've obviously sold those rights already. They can't rescind those. But for new Disney and Pixar movies, those will no longer be available on Netflix from 2019. And then they will be launching their own streaming services, will include that content, the movie content, and also ESPN. It's interesting, ESPN, they've been very cautious with that because it's such a valuable property.
Yes, they don't want to undermine their relationships.
Exactly.
So I wonder how they'll do that.
So what they're going to do, it's a similar model to DSTV, in fact, where it's sort of a complementary service. So you actually have to subscribe to the main cable service to get the streaming service.
Okay, so if your existing cable deal buys you ESPN, you get some kind of a username, and then you can watch premium content with a bit of extra, but on a streaming basis.
Yes, otherwise the streaming for the non-subscribers is stuff that they don't currently broadcast.
But the problem here is that we know Amazon has got a boatload of money, an enormous Prime, Amazon Prime membership. They have started bidding for like NFL games, which means that ESPN can't get them, which means that they'll go there. Then you get other potential players coming down the line. Twitter, for example, bid for and got a couple of Thursday night NFL games. We know also that Google has got, unlimited cash resources, and they're thinking about getting into this space as well. So that's a huge problem for the likes of ESPN, even securing the rights. Yeah, so it does create a complex environment, difficult to forecast and understand. And will ESPN retain its market position? Because the one fascinating stat I heard is that one weeknight NFL game cost ESPN more in terms of the acquisition of the rights and the production of the actual game, more than the entire season of Game of Thrones. And you know how much Game of Thrones costs to produce? All of those flight scenes with the dragons flying around blowing flames. So that's damn expensive. Yeah, which just shows you that sport, I think, remains premium content. They are able to on-sell it to other cable providers. So
for now, it still makes sense to pay those astronomical costs.
Because sport is special. This is the key. Sport is special because, you know, you can still watch something a little bit late if you just tell your friends not to drop any spoilers. But sport, I mean, you can't watch the big game like 3 days later. By then, everybody knows what happens. And there's nothing like watching sport live with the tension of wondering about the outcome if you're a supporter, compared to knowing already, we lost that game or we won. It's just not the same.
Yes. So
we've got more time for this than we need, because we can give less time to those local stocks later. What about the movies? Because Disney owns Star Wars, and it's got Pixar for animated, and it's got the whole Marvel comics. So that means all of that rubbish, those Iron Man and all
Avengers,
of those things.
That's it, yes. So
those movies, they make too many of those sequels, in my opinion.
Yeah, but what you've seen is Disney's strategy.
At the box office.
It has been content. So Marvel, and I think was more successful than they anticipated, because what we've seen is with the advent of CGI, computer graphic animation, they are able to produce these blockbusters where they couldn't actually really physically do it before.
They probably actually have better margins than the ones that have to have real actors in them.
Probably do, yes. And then, so that's been very successful. And as you said, it can go on and on. There can be reincarnations of the stories, and so it goes. And then LucasArts, in terms of the Star Wars franchise, again, they paid a large amount, but a lot of cross-marketing opportunities and very valuable content, and the ability to also generate more content.
Because those movies open and they make like $1 billion on the opening weekend.
Yeah,
because everybody has to go and see the latest Star Wars movie.
That's right. So
it's compulsory.
And that's what Disney has been doing very well, is owning that content, and that remains very important, because what we're seeing is all these streaming services, they need the content. So they're still able to have an outlet.
That's a powerful position.
That's right.
And then one final question, what about the resorts? I mean, the Disney Worlds, there's the one in Paris, there's one in Hong Kong, there's one now in Shanghai, or that area there. There's LA, there's Orlando. I mean, the prices are quite high. People still keep going there. I assume they make reasonable money out of those.
Yes, so around, I think, 14% of their revenue. So what you're seeing is, I think, with the content, that's part of the sort of cross-marketing of it. Now you can have a Star Wars experience at a Disney park and a Marvel experience. So that adds to it, I think. So it's part of the overall package.
Anyway, did we even look at the share chart? Oh my God, I've been waffling here so badly. You can see it hasn't done all that well, and that's because of the confusion and the anxiety about ESPN's declining numbers and the monies. So do you think it's going to go high? I mean, it was down yesterday, this deal to go into competition with themselves. Who knows? Are you hot on this one or not?
So look, I think they had to take the leap, and we'll see that streaming is the future of media. It's not exactly clear who's going to be a winner or loser, but they have to be part of it. They have to cannibalize themselves. I think it's a very positive move. They do own premium content, and that is very valuable. So I think it still remains very valuable. I'm hot.
Hot. Okay, I'll join you there. Hot on that.